If you trade futures, you have to know about circuit breakers. Whether or not you're a Goldbach trader, circuit breakers are essential to the efficient running of the futures markets. These include the equities markets, energies, agriculture, metals, even crypto futures. Circuit breakers are fundamental to how the markets function safely and orderly. In this video, I'm going to explain circuit breakers, primarily because I've received a lot of questions about this since Hoppy's book came out. So circuit breakers are fundamental to the Twin Tower trade plan. So I'm going to ensure you understand exactly what a circuit breaker is, so then you can use it for the Twin Tower trade plan. If you would like a copy of this book, just click the link in the description below, find Hoppy's name. That will then show you all of his books that are available, and just find the Twin Tower trade plan. So what are circuit breakers? Circuit breakers are enforced by the CME group to prevent the markets from completely collapsing or volatility being too high. Now, how are they created? So this gets a little bit complicated, but I'm going to do it step by step so you understand it. A reference price is used during the trading day, and that reference price is used for the circuit breaker. Now, the reference price is calculated between a certain period of time, which is 2:59 and 30 seconds to 3 p.m. Now, this is central time. Okay, so we need to convert to EST because that's what we use as ICT traders. Okay, so when we convert that to EST, that is essentially 3:59 and 30 seconds to 4 p.m. EST. That 30-second candle, the volume weighted average price of that is calculated as the reference price. And I'll show you how to get a very quick proxy of that to make it a little bit easier. So this is the price action for Friday. So if we zoom into the 30-second time frame, and let's find that candle, that 4 p.m. candle. Okay, so this candle here starts at 4 p.m. and finishes at 30 seconds past 4. So it's not that candle we want. We want this candle. So the volume weighted average price of this candle gives us the reference price. Now, in order to shortcut this, the trick I use is I just take the equilibrium of that candle. Okay, that is a great approximation to the volume weighted average price of this 30-second time period, 3:59, 30 seconds to 4 p.m. Okay, that we can use as our reference price. Now, if you want the absolute exact reference price, you can go to the CME Group website, and that will show you what it is. So this is my approximation. Okay, so if we zoom back out, so the price I pulled from the CME group was 24,113, and I have as my price 24,113 and 3/4. Okay, so that's close enough. So once you have this reference price, what do we do with it? So what we do is we understand where the circuit breakers are. We calculate it. So from this reference price is not allowed to move greater than 7% in either direction, either up or down. Okay, so this is quite a wide band. Now I'll do it as an approximation for you guys. Okay, so there is the top price, which is 25,800. Okay, as an approximation, 25,800. And the CME's price is 25,799 and a quarter. Okay. So that's close enough for our calculations. And then the bottom circuit breaker price will be, now obviously I'm not getting the exact price, I'm getting an approximation, 22,425. Here we go, 22,426. Okay, so great approximation. So what does it mean if price moves to this circuit breaker? If the price moves to this circuit breaker, you are still allowed to trade, but price is not allowed to go any higher. So these are important reference prices in the market. So every institutional trader understands these, and they understand something else, which I'm going to go into slightly later, which is more relevant. But for the purposes of the Twin Tower trade plan, these are the circuit breaker prices. They are calculated using that 30-second candle every single day, and price is not allowed to go higher or lower than these. There is also a dynamic circuit breaker in play, which is more relevant to our day-to-day trading. And that basically says Within the day, price is not allowed to move greater than 3.5% within an hour. So let's say during the day, price was trading here at 5 o'clock. Okay. So we're between 5 and 6 o'clock. The dynamic circuit breaker says price is not allowed to move greater than 3.5%. So institutions know this, that if price is going too close to this 3.5%, trading will be paused. So trading is paused for 2 minutes anytime these dynamic circuit breakers are broken. So now you understand what these two circuit breakers are. You can then have a look at the book and have a look exactly how Hoppy fractalizes them for the Twin Tower trade plan. I've had a lot of questions about this, so hopefully you understand now what these circuit breakers are. You can go to the CME Group website and you could find the reference values for yourself, or you can use the very simple hack that I did to find the equilibrium price of the 30-second candle. If you have any more questions about the Twin Tower trade ban or Goldbach, leave a question below. And if you would like to learn exactly how I trade index futures, currencies, energies, metals using my golden bullet trading strategy, there's a link to my mentorship below.